what does the VIX Trading System do? It does two things. The first thing the VIX Trading System does is it protects you. And I'm going to show you exactly how it protects you by monitoring VIX term structure. I'll get into that. The second thing that it does, it includes a backtester. So you can go through all the different trade signals, you can put in your different permutations, and you can see the exact performance of this incredible tool. I'm going to walk you through both of those things. So the first thing it does, it protects you. And the second thing, it gives you the backtester so you can play around with it and prove the substance behind these signals, and then the confidence in the trades you could take after that. So let's get into it. We're just looking at spiders. Let's look at S&P futures instead. Really the same thing. Warnings. January 21st. January 21st is going to take us right here. Be careful, folks. This would be a good time to consider buying index puts or selling S&P futures or selling NASDAQ futures. I see a potential 5 to 10% correction. Pablo Lucina warned his coaching clients. January 30th, right here. The 9-day VIX continues to trade above the 30-day VIX. Be careful. January 31st, next day. We're getting close to an all-out sell signal. Short-term VIX staying above longer-term VIX. Jonathan warns his coaching clients. And then February 27th, what's going on right now makes 2008 look like a blip. This was the warning. This was all from the VIX Trading System. How could this have helped you? Well, you can see Chris. I've been watching the VIX 9-day and the VIX 30-day, the red and yellow plots on the VIX tool. And when they both got below the moving average, which is going to be right here, I went flat in my 401k and IRA. Missed the down moves yesterday and today in those accounts, which has been a major relief. Seems like every time I go off script, it just bites me in the ass. Thanks for such a great tool. I should also add that Pablo's VIX tool got me flat in several accounts on Friday. So the first major benefit is that it's going to protect you. But the second one is the backtester. Now in front of you, here's the VIX tool. The VIX tool is looking at the 9-day VIX, the 30-day VIX, the 90-day VIX, the yearly VIX. That's called VIX term structure. Traders need to learn how to follow the VIX curve, because when short term, a 9-day VIX starts to spike and the further out VIX haven't spiked yet, there's probably some troubles ahead. Let me show you how the backtesting tool works. For one, the VIX Trading System will give you buy signals. Recently, it's given us 2 more buy signals. If I just put on an S&P chart, hit the beaker. Now the backtesting tool comes with the VIX tool because we want you to be able to run your own tests. VIX backtesting insanity. Here, VIX backtest trade size. Since we're backtesting it on the S&P futures, we only need to do a 1 lot. We want to take profits when the S&P futures make 100 points. This is where we can use a stop. To start with, I'm going to run a 21-day study. So a 21-day stop. So going back, we're going to use all the data we can. We are going to take profits when the S&P futures make 100 points, and we are going to stop ourselves out after 21 days. If that doesn't happen, okay. Apply, okay. And now we have it going all the way back, I think, to 2013. So now we take any one of these and just right click, very simple to use, show report. Now again, this report that I just ran includes a 21-day stop for S&P futures. We're going to run this study with other parameters as well for your comfort. What do we get? Total orders, 18 orders. Total P&L, almost $60,000. Going back to 2013, trade P&L, if we look down, winners, 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 and we have one loser right here. Now we also have two open trades. One of the trades we've already made 100 points on, but as of this date, we still have one more open trade. Today, it's June 25th. When I'm making this, we expect the S&Ps to rally 100 points, and if it doesn't, we'll stop ourselves out after 21 days. Let me run some additional back tests. Again, hit the beaker. Open this up. What I'd like to do now is show you the test with no stops. So now we're going to run the same exact test. When the parameters hit, we're going to go with no stop. It'll look like that. Okay. Apply. Okay. Now remember, this doesn't have a stop. And we're also not robots. This doesn't mean blindly take every trade. But what this does mean, and again, you can go to any one of these, right click, show report. What it does mean is the VIX tool needs to be respected. So even if you're bearish, if the VIX tool gives a buy signal, it's got to be respected. Be careful. Maybe you shouldn't be as bearish as you are because you know the back-tested history of this valuable tool. Again, if we do it with no stop, max trade, total P&L, total orders, and again, it's come back every single time, no losers whatsoever. Let's close this. I'll do one more study for you. And for this study, why don't we do back test profit taking amount? We always keep that at 100. I wonder what happens if we go to 10. Just go to 10. Okay? Apply. I don't suggest using it for 10, but I just want to show you how easy it is to just mess around with it and sample it. But again, use the tool and the buy signals, not like it's the gospel. Not like, oh no, it gives a buy signal. Let's cover everything in our portfolio and just get balls to the wall along the market. It's another piece of the puzzle. It's something that needs to be respected. If you're bullish and you have a lot of reasons of why you're bullish, and then you get the confirmation from this badass trade signal, well, that should just give you more confidence. But again, nothing is the gospel. Everything needs to be used together. And this is just a tool that we use as one piece of the puzzle. This is interesting, again, going back about 8 years, a 10-day stop. A 10-day stop, think about it. We're asking, give us a buy signal. We want to make 100 points over the 10 trading days, and if we don't do that, get out. It's a pretty tall ask if you ask me. How did it do? 19 orders, $36,000. Trade P&L, we're going to take more losers. Again, hey, if we don't make 100 S&P points in 10 trading days, we're getting out. So overall, still pretty freaking good. Again, I don't suggest you doing it with 10 days. I'd want more time. Let's play around. What if we go 30 days? And by the way, if you're thinking about buying this tool and you're curious about a particular back-tested study, just ask. Ask, we'll run it again. If you're looking at this video a month from now or 2 months from now and you want an updated backtest, feel free to ask. The more information that you have, the more comfort that you can be that this is a really awesome tool. Again, show report. Not sure what we're going to come up with running at 30 days, but I'm guessing it's probably not too bad because, again, this is a badass study. 18 trades, 48,000. We got a loss here, barely a loss here. That one sucked. We lost 9 grand, but overall, better than a sharp stick in the eye, if you know what I'm talking about. So not too bad. So what does the VIX backtesting tool do? Well, it comforts you, just like Chris was able to protect his account before the massive drop. But it also teaches you about VIX term structure. And if I open the cog up, here's what the VIX tool looks like. It comes with about 5 hours of training, so you'll be able to learn everything. This is going to be more of the outright market. The outright market analyzes the 9-day VIX, the VIN, the VIX, the VIF, the 3-month VIX, the 6-month, the 1 year, and so forth. What are all these things? Well, you got to learn them. Most people just follow the VIX, but the VIX is a 30-day moving average of the S&P 500's expectations of its expected move. What about the VIN? You ever hear of the VIN? The VIN's a 23-day VIX. Near, VIX near, VIX far. This is going to be, I think it's 37 days. So you could also get creative. Look at the difference between the VIN and the VIF. 23 days versus 37 days. This is the VIX term structure. This is where I want you to get to. This is being creative in the trade. It's looking at things in a different way, and you'll shock yourself how much you end up learning by playing around with these different studies. So let me drill into the VIN and the VIF, see what we learn. Let's go back, 90 days, 1 hour, okay? And this is what we get. You can see they break apart, play around with it, see what that means when all of a sudden you see the 23-day VIX and the 27-day VIX start breaking apart. You could overlap the 30-day VIX in there. Have fun, be creative. Curve is normal. Why is the VIX term structure curve normal? Well, it's normal because the VIX is a 30-day measure of volatility, is lower than the 90-day measure of volatility. So this is a normal environment. When the pandemic hit, you could see the shorter term VIXs way higher than the longer term. That is something that you need to learn about, and the VIX trading system is the easiest way to learn, but most important, it gives you the back-tested system to make you very comfortable in the trades that are shared going forward. Thanks for watching. Any questions? Support at Masters in Trading. Have some fun, guys.